Hey guys, what's up? I'm Jared from Click Capital, and welcome to our daily show where we perform technical analysis on 50 markets and give you our insights and forecast on where things could go. Okay, today a very much risk on day. S&P up 1.2%, Dow Jones up 0.5%, Nasdaq up 1.73%, Russell up 1.25%. It's in our opinion that the market is pricing in a better than expected CPI reading for tomorrow. Consensus is 6.5%. We think it's going to come in at 6.2%. We think that'll give us a nice moderate rally of 2.3% up to about the 404 mark up on this trend line here. But before we give our final diagnosis on the S&P, we'll go through the rest of the market and to help form our opinion. So we can see international is trading up to the top of its range, and if we go to the medium term chart on the 3-day, we can see we are now in a bullish medium term trend indicated by the green trend candles here. Emerging, not quite there, but we has had a really good bounce off a bottom, and we are currently outperforming the US. If you look at the medium term on the SP, we still haven't broken out of this downtrend line, even though the Dow Jones has. It is going up into some overhead supply zone. The Nasdaq, however, has been testing this support low and is the weaker of all the bunch. Volatility, as we said yesterday, is likely to rise going into tomorrow's CPI. We think this is a pretty good floor here around 20. If we do come in a lot better than expected, like we expect, like 6.3, 6.2, 6.1, volatility could very well dive and we start hitting down into the teens, and we could even go into one of these vol compression modes, even down into 17, 18 again, like we saw in October 21 when we got down to 15. So otherwise, if it does come in worse than expected and we see a reading like 6.6, 6.7, and that means the Fed will have to keep their foot on the gas with hiking rates to get on top of inflation, then we're likely to see the VIX hit at least the top end of this range we've got right here at 23.90, and possibly even above 24 into 25 tomorrow. However, it looks like the market is already pricing in a better than expected number. We can see the VIX term structure fell today. So typically, for those of you who don't know, this is the volatility front month against the second month. And typically, whenever it goes above 1, there is always a crash. You can see back here in the 2020. And so above 1's kind of a risk off mode. Below it's kind of risk on. So the futures, and we can see here with the VIX and the VIX 9-day, there's not much front loading there saying that the market's going to spike. Cyclical ETFs versus defensive ETFs had a really good day, up 1.38%, actually more than the market, even though the market was up. So once again, the market's very much in a risk on mood. Nasdaq up a little bit more than the SP. Small caps flat, growth up 1.39% versus value, and the yield curve moving down. Gold was the only sector off today, gold miners. However, interest rate sectors like industrials, discretionary up 2.7, retail up 2.36, home builders up 2.5, real estate up 3.63% today, the winning sector today. All interest rate sensitive sectors performing really well. So the market kind of front running a good number here. So what we're setting up for is a good expectation. So if we do get worse expectation, the market is going to sell off hard, because right now it is saying no, it is going to be a good number. It is better than expected. The Fed can start looking at possibly bringing down rates later this year, or finish their hiking cycle earlier than expected. So If inflation is worse, expect all these interest rate sectors to sell off hard to adjust for the fact they've got it wrong going into it. If we come in at consensus, we could still sell off a little bit, since it's kind of already, the market's kind of already front running a good number here. As is indicated again by treasuries, down off 1.8% with the 10-year at 3.55. Be interesting to see if we do get a good number tomorrow. The treasuries 10-year will come down, most likely test this 350, 345, which we consider a demand zone, which we still think will hold unless it comes in way better than expected, like 6% or 5.9 even. We think this area will hold, and it is a major support area, and this is going to be a big determining factor of where equities go, because if we do go through this below, that is really bullish for equities. If it holds and goes up, then it's going to be hard for the market to rally with high rates in the background. Dollar index flat, it's kind of waiting to see what happens. Commodities higher in the commodity index. Dr. Copper higher again, it's breaking out here. It looks like to be in a nice short-term uptrend, and we've just gone bullish on the medium-term chart by the green trend candle there. I have a long-term trend on the weekly, has still yet to go bullish. I imagine it will do if we go up here. So that is, again, front-running a good number. That's the market telling us. That's one of the biggest leading indicators out there, because copper is used in just about all parts of the economy. It's a great sign that the market thinks the economy is going to be fine. It's even, that chart's even saying that there's not going to be a recession, and everything is good. Gold flat, still in a nice strong uptrend on the short term, as is silver. Natural gas, if you watched yesterday, we are long on this instrument. Do have a tight stop under 985, and we're looking for a mean reversion play back up to the 50-day, or at least around 50% retracement from the high back in December, the last kind of local high, which would take us to around 1628. So this is quite a good, 2 to 3 risk reward on this trade. And technically speaking, we are down here in what we think is a bit of a demand zone. We're at the bottom of the buy-sell band, and we are still, even with today's up move of 2.5%, we're still 35% below the 50 bar. And we can see momentum is stalling out, and there's just a lot of volume, which looks like it could be a bottom. Uranium flat, oil up, and pretty good day in large megatech, which has been trading really flat and heavy lately. We have Apple up 2.1%, still showing downtrend on the daily chart though, so I wouldn't be getting long here. AMD above its 50 bar. Amazon had a great day, ripping above its 50 bar, 5.81%. However, we're still yet to confirm uptrend on the daily, and the medium term as well is still showing as downtrend, so I wouldn't get long just yet. Barber's flat and holding. Google up 3.5. Meta flat. Microsoft up 3. Netflix flat. Nvidia up a little bit. And Tesla, we still have high conviction. This is a short-term bottom, and we'll come up and tag the 50-day, or a 50% retracement from the last high on the 1st of December. Okay, so that's a bit of a bird's eye look at all the markets. So clearly we can see today is risk on interest rate sectors going up and pricing in a better than expected CPI number, which is due out at 8:30 tomorrow morning Eastern Standard Time. We think it's going to come in at 6.2%, and the market will rally up to this trend line here. And that's going to be the big interesting spot that a lot of people are looking at, because it's pretty obvious, and everyone's calling it the mother of all trend lines. Dow has already gone through it, Nasdaq not. Small caps, one could say that we kind of is at that point as well. So, but overall, we're still bearish on the medium-term chart that they're looking here. So the market really has to take out this trend line with conviction. Then it's got even this supply zone to contend with, and we can see on the range strength it's 13.21. So the market is trading really thick, and it's got a lot of overhead resistance. So for now, technically, we are still in a bear market. This is a downtrend. It would have to really push through up here and go uptrend in the medium term for us to say that this could be a bottom. Okay, so we'll be back tomorrow. It'll be interesting with the price action with CPI. Let's see what happens. Stay safe out there, and we'll see you again tomorrow.